Next question comes from, it's another Allison, but this one has 2 L's, in Florida. How much should I have in international stocks? I think the frequently accepted recommendation is about 30 to 40% of a portfolio, or even up to 50%. But this week, there was a long and heated thread on the Bogle. They're always heated on the Bogleheads forum, aren't they? Challenging this. The title of the thread was, "It's not enough to mumble, stay the course. International investing has been a disaster." Would you be able to comment on this?
So first of all, let's start, since this was playing off the Bogleheads forum, what Jack Bogle says. And I just recently heard an interview. The Bogleheads conference was happened recently, and he made some comments about international investing. So he's one of those people who says it's not really necessary. When you look at the long-term returns of U.S. versus international, there's no evidence that international outperforms U.S. over the long term. Plus, U.S. is a more stable country. We have a pretty good, highly regulated securities market, so you don't have to worry quite so much about fraud. Plus, around 40% of the revenues from companies in the S&P 500 come from overseas ventures. So you're still getting some international diversification there. So if you're going to go with Jack Bogle, and it's hard to argue too much with Jack Bogle, just stick with U.S. stocks. That said, when he was running Vanguard, and he has since retired, they had international funds, and they still have international funds. And one of the reasons there are time periods when international stocks outperform U.S. Happened in the 80s, happened in a good part of the 70s, happened in the first decade of the 2000s. And Jason Zweig in the Wall Street Journal wrote an article saying, like, it's pretty tough now from a valuation standpoint to ignore international stocks. They're about half the valuation of U.S. stocks. Of course, we've been saying this for years, and international stocks still, other than in 2017, have underperformed U.S. stocks over the last 5 years or so. So I would say you have to be comfortable with the volatility of international stocks. I have about 20, 25% of my 401k in international stocks, but you don't have to have it. One thing I will say, though, is that one of the way that was phrased on the Bogleheads is that international investing has been a disaster. It's not really been a disaster. Over the long term, international stocks have underperformed U.S. stocks a little bit. But it really depends on what time period you're looking at.
Yeah, and I would add also if you're buying individual stocks, there can be some extra trading costs for some of your brokerages when you buy international companies. I work mostly on our Canadian operations, though I have ideas through all our services. I'd say, and that's an easy market because it's pretty familiar with us. It's right across the border. There's other ones where there's unique things in accounting and stuff that are a little bit different and more difficult to comprehend. So I would say, I don't think you need to. But if you have an interest and you want to find great companies, why would you not look everywhere for those? But you don't have to. You can do very well. Berkshire Hathaway and Warren Buffett have very little of their capital. They're trying to buy more international companies, and he's been trying for years. He's done pretty well with just kind of mostly sticking to the U.S. market.